The recent moves by two of the largest insurance companies in the U.S. to stop writing new homeowners policies in California are having unintended consequences. Our media partner, the San Francisco Standard, has a new article out today explaining why home buyers are stressed as State Farm, Allstate pull back in California. Joining us live now is Matt Kupfer, reporter with our media partner, the San Francisco Standard. Matt, thanks for coming on.
Thank you for having me.
Refresh our memories really quickly. Why have State Farm and Allstate stopped writing new insurance policies in California?
Well, there are a number of reasons. One of them is simply the exposure to risk from things like wildfire. It's the cost of construction, of repairing homes that have been damaged. And it's also things like the cost of reinsurance when real estate companies sell their risk to other companies, which allows them to sort of insure more people in the state. It's basically, it seems to be sort of the perfect storm of multiple factors.
And this part is what your article really focuses on. How does this affect potential home buyers?
Right. Well, so having home insurance is a critical component of buying a home with a mortgage. And most people, especially in the Bay Area, buy their homes with mortgages. State Farm was the largest home insurer in California, and Allstate was the fourth as of recently. So these are two of the biggest players, and they're no longer an option. That means that people may have trouble getting insurance for the homes they're trying to purchase. And that's particularly the case if they live in areas where wildfire or other ecological issues could be a threat. So this could potentially make buying a home more difficult and more out of reach for people in the Bay Area, although a lot of things remain in the air at the moment.
You know, if buyers cannot find insurance for their property, can they back out of the contract?
Well, I think that's one of the issues people are dealing with. A number of realtors told me that this is something they discuss with their clients as they look at homes. They look at whether the home can be insured, but also some of them are beginning, it looks like, to include an insurance clause in the contract which says if we can't get insurance for this house, then we can back out.
Ah, okay. So look, what options do home buyers have? I understand there's kind of a last resort option.
Well, so there are still 100 insurance companies, over 100 operating in California, but not all of them will insure every kind of property, and not all of them maybe work in every area. There's also something called the California Fair Plan, which is the insurer of last resort, primarily for people who can't get insurance because of fires. It provides a basic fire insurance coverage. The problem is that it is pricier than other regular market insurance, and it also simply covers less. And so it's not intended to be a permanent solution. It's meant to be a temporary solution. I think right now there are a lot of people who feel they don't know what the solution to this problem is for home buyers and for homeowners.
I mean, obviously, there's the worry that other insurance companies might follow, right? Follow the biggies. Could this potentially cool off our housing market more here?
That certainly is an idea that's being discussed. I think one of the challenges, though, is that you could see, I was told by a realtor, this was quite interesting, that you could see housing prices going down, but in fact, actually the costs are just being shifted. So maybe if someone now can't get insurance for the home they're going to buy, rather than backing out of the contract, they might ask the seller for a credit. And so it might look like, oh, the price went down, but in fact, the price was actually just shifted to someone else.